Welcome everyone, my name is Mike Hamilton from Trade the Easy Way, and I wanted to start this little short video with this outline of the current UK economy, and we can talk briefly about the US economy as well. You know, where are we? We are in the second half of 2025, looking at the back end of summer with a lot of geopolitics going on, etc. And you know, the rate cycle on a downswing with central banks pulling back rates and possibility of the US dropping rates next month. So yeah, we've got UK GDP at 0.3% the first quarter, 0.7% in the second quarter. One of the reasons why I did this sheet is because I think that the UK has been dipping in and out of recession for at least 6 or 7 years, possibly more. You know, the last government, in fact, when Boris Johnson was elected in 2019, we just narrowly escaped a recession signal then. Now, at the point in which Boris Johnson was elected, we had 1/10 of 1% GDP. And we've been bouncing in and out along throughout the back end of the Conservative government and the new, and of course we've got these figures with the new government. So we've got 0.3 in the first quarter, 0.7 in the second quarter. We've got inflation still high-ish. In fact, we've got UK inflation today, but expected to tail off back into this year and into next. The labour market is cooling. There are definitely fewer jobs on the market at the moment, and consumer has been reining in spending. I saw a report today about how people are eating out less, and forecasts are for modest growth. So I think it's fair to, believe it or not, it's fair to say we are actually in an expanding part of the cycle, and I base that on this data and the idea that we've been in and out of recession for at least 6-7 years, and we, you know, having had this growth this year, we are technically expanding. You may not feel it. Perhaps you run a business and you wouldn't agree with that. Fine, but depends on the sector, of course. But that's where we are. So I want to start with that and use that as to influence my decisions for further investment. So a quick look at the dollar. That's the dollar index, and so after this this wave pattern up to these highs here, we've had a wave pattern to the downside, a corrective pattern, and any highs have since been sold into. We had a 3-wave correction, and even that got sold into. So there's a high probability of a rate reduction in the US next month. Certainly a lot of pressure from a certain politician to drop rates. So this could still, if this breaks 95, the dollar could still come further. What do I believe is going to happen? I think even with a rate drop, if we do get a rate drop that is, I think the dollar will still at least pick up back into this 101 level. So I got interrupted there, so let me just sum up. If this is head and shoulder pattern and we close above this 98, then I can see this dollar picking up. Now, contrary to popular belief, commodities, particularly the grains, will actually, if the dollar picks up, you will actually potentially see the grains pick up. If you look at corn's actually a convergent relationship with the dollar. So the dollar's fallen off just at the same time as this has fallen off. Just a quick, something that really interests me is if you look at August last year, we broke out and corn went to $5.20. So if we break out of this, we hold this support and break a whole $4, I can see this potentially at least going to 5. Now I've got, FYI, I've got a key interest in this picking up because I'm still in. By the way, these colour areas here you see are fib zones. So if this holds, and the wheat can stay above 520 and close above 540, I can see potentially the wheat going on a run. Well, next stop is going to be the $6 mark, and we were last up there in February this year at $6.20. Of course, if this closes under 520, we're going to see 488. Volume has been holding up here. We have had a couple of higher closes, but we're under the average, under 50-day average, and weak, and could so easily fall underneath this. But bear in mind that August last year, back here, wheat went from 520 to 625. Alright, so you can see this area in particular, this pink area is that we're in right now, is absolutely crucial. If this holds, this is a very powerful bullish signal if this holds, but for obvious reasons, if it doesn't, then we are going to see low numbers. This is gold, sideways, as which you already knew, but ever since we poked up here and dropped back here in April, May, we've seen a series. Well, we're in a box play. Normally box plays are over once you get another severe dip. So I can see us coming down to this grey area here to complete the bottom of the box, and then if that happens and we hold, then I can see this marching up to 3,500, 36 and possibly 37. Alright, so the wave pattern here is 1, 2, 3, 4, 5, 1, 2, 3 wave correction, and we have a series of 5 and 3 wave corrections, and now we're stuck in this box, and it's a tighter box. We're getting in a tighter angle there on gold, so it's if you're in it, stay put. If you're not, stay away until we get some more clarity. Just going to talk about oil, and then we'll move straight on to stocks. So oil had a 1, 2, 3 wave correction after this 1, 2, 3, 4, 5 wave drop. We've since had another 3 wave correction, and here we are. $59 is the support level, but we're seeing lower highs and at the moment lower lows. We are weak. There is plenty of oil in the world. Supply suggests that this is lower alone. We're under the 50-day average, so unless we close above 64, 65, we are lower. If this really fails, then I think we will see. Let's have a look. If we break that support, which I think is likely, I think we'll see at least 54 and could easily see 48 if this really drops out of that. Where have I got that? I've got this fib to the 30th May lows at the moment. Okay, so be careful of oil stocks. Talking of which, let's look at tallow. Now, tallow came in to the just under 9 or around the £9 mark, P mark, pushed up to 11 or close to 12, and is coming off again. So if we stay under this 11.5, watch out. If we get back above 11.5 and 12, that's very bullish. But path of least resistance, I have to say, is down. This volume down here could be the short sellers cashing in and forcing that to bounce. So whatever happens around this 11.5 is absolutely key. All time around the 50-day average, we are in the threat of a lower number. 8.7 and 5.2 are the lower support levels. What do I think is going to happen? I think there's a, you know what, despite what I've said, I think there is because this is so beaten up, and if we can get above this 11.5, I think this stock can be a recovery stock. That's a significant volume to take it up there, were that volume to get back to those levels on that short covering and stay above 11.5, I think that is well worth sitting in. Volatility index, the fear indicator is low and possibly going to come down to the February levels. Nasdaq is sitting up, and so I've measured this to the drop from May this year, the turnaround early April, mid-April, and so we've got close to this extension level up here at this point, pulled right back, didn't quite touch the 50-day average, pulled back into resistance. So it's all about this 23,800, 24,000. If we can close above there, which I believe we can, then I think we're going to see 25 and 26. Otherwise, if this fails, we're going to see the February highs again, 22,200. At the moment, there is no reason to sell this market, but I think we could easily see deeper pullbacks. In fact, we've got Fed minutes tomorrow, so the market's going to look for indications that we are on course for a rate drop in the US next month. FTSE, so we talked about those GDP numbers and the fact we are in an expanding economy. It's very fragile, it's a very tight range. So in a box play like that, I would expect a pullback could easily come down to 8,900, easily, to come into these February highs. That would make sense. Sorry, the February March highs are over here, aren't they? That was the June highs I marked here. So this is a key level of support now. So unless we start closing higher here, I think we will see some volatility as we get into end of the summer, early autumn, at which point, if that gets picked up, then I think we can get into potentially go and attack 10,000. So, I mean, coming back to what that sheet I started with, overall bullish, but cautious. At times, I have to admit, too cautious. I've missed a couple of entries recently, which I'll talk about in a minute. So there's a couple of penny stocks I'm in. I'm still in this IQE. If this, with a box play, if this has broken the box and stays above the 8.5 and of course the 10, I think this could really move. Consolidations, as you heard me say so many times, are over, often with a breach of the bottom of the box, the consolidation zone, and then a push back in. The jury is still out, of course, because if we stay under this and close under 8.5, this IQE tech stock is done. But otherwise, if we stay here and at some stage close above 11 to 12, I'm looking for 20p. The next penny stock is Metal One, involved in commodities. Ran up to 8.5p and then got sold. A lot of profit taking at 8.5 because it was 4.5, 5p. It's building again. The volume's coming in here, so I'm still in this. I'm interested. I bought I think I bought about 5.1p or something. I can't remember now. So I got a tight, small profit in there. We're at the low end of this channel. The top end of the channel will take you into 28.30. But of course, if we lose our footing, close under 4, then the risk is that could go, who knows, maybe into nothing. So take small positions in these penny stocks. If they work, you get a high reward. If they fail, just walk away and of course pick a better stock. One sector that's done very well in this switch in the rate cycle is financial services. So here we got Pru, and we talked about this several times. So this, a lot of support down here at sorry, this is Sabre. Sorry, insurance company Sabre. Talked about this at these lows. This is one I missed. It flew up to 140, got close to 120, and we've recently touched 158, 160. So I think there's still plenty of time in this. I need to do a little bit more research, but if this comes back into the sort of 140 mark and holds, I would be interested in this because I think this has got a lot more legs. Let's talk about Pru now. So I talked about this pattern down here back in the last year, earlier this year. Lovely little pattern, low RSI, broke up back into the 50-day average, stayed above this trend line, and then went on a lovely run. 1, 2, 3. Huge correction in the early April volatility, and here we are just around the £10 mark, looking like we're going to go to 10, 11 and beyond. If at any stage we see a decent retracement to 850, I will be a buyer. So if we come back to that March, April high and hold, I'll be a buyer. I don't actually think it's going to do it. I think you'd be lucky to get 920 at this rate. Really like this stock. I think it's time to get into this. This is Man Group. So back here we eventually went up to 180, 181. If we see a repeat of this, I can see this getting back to 190, £2. So if this volume holds, I'm going to be trying to pick up 160 tomorrow with a stop under the 150 mark to see if we can just wind up. The main breakdown area is around the £2 mark, so that will be an obvious target. Okay, and that's Man Group, ticker EMG. So I didn't finish talking about financials. This is fund manager Polar, which we talked about, and we are holding this support, looking like we're going to break through £5 and go up to 550, which would be last summer's highs. So if you want in, I would see if we get to 450, 440, 450. At the moment, yeah, you know what, I think we might see that. If we get a bad day in the markets, I can see that dipping back. And but I think if that holds, then I think we are capable of £5, 550. So I'm going to talk about US stocks here at the moment. I've not talked about US stocks a lot recently, but I'm going to now. I was about to call this. I was looking for what day was it? It was this day here, this bar here. It spent all day drifting. We had 3 lower closes in the 4-hour chart. It spent all day drifting lower. I thought this is gonna see 250 because it closed. Warren Buffett came out saying he had a big stake in it. This is United Health, UNH, and here we are above the 30 mark, 309. So I'm just going to hold it. This is a recovery stock. If this does come back to 250, 270, and that's set alert, I would definitely want to get in. But at the moment, it's hard to see with the volumes. Now the cat's out of the bag with Buffett's stake. At the moment, it's hard to see that pull back, but we have struggled up here before. So we see a lot of profit taking and a pullback on UNH at 250. I mean, same sector in the US, health. I mean, health and tech is pharmaceuticals are two of my favourite sectors. We gapped up here, so on this CNC, I would love to see that gap filled to get me in. Volumes are increasing. You again may not see it, but I'm not going to chase this stock. I'm going to hold out for a gap fill down here. Ultimately, we've got a gap fill up there at the $55 mark. Okay, so I'm looking for 25 on this CNC. AMD, I'm trying to be very patient to look for a decent pullback on this one. chip maker. So I really want to see 151. This is a sell zone from July last year, so that's why I'm not chasing it. So I really want this to reconnect with the 50-day average, pull right back, and give me a chance to get in on AMD. Now just to quickly flick through some stocks now, this is Vodafone, back up at resistance. So we had a decent move from 61, any pullback to 75 on this one. I think Vodafone is a good buy down there. RNWH, Renew, any pullback to, could see on a bad day, might get 715, 720. We're currently up here at 832. I think this is a bullish consolidation, but any dip in that one I think is viable. We talked about this ages and ages ago. Well, we talked about it in March, April. Even things like Pets R Us. Is it Pets at Home, Pets R Us? I can't remember. The ticker's Pets anyway. This is seeing a significant uptick today. If you're interested in that sector, take a look at that one. EasyJet, I'm liking EasyJet, so I got out at this key resistance point. We gapped down, did a corrective wave into this pattern. If this carries on, I can see EasyJet filling that gap at 583 in the autumn, possibly earlier, but I think it may take as long as the autumn to get up there. Alright, if we break 590, then I think we're going to see £6, 650, and longer term 745. We've got a long way to go. I suspect it could, if we are going to get there, it's going to take time. But short term, I'm sitting in, got back into this, I think at 495, so suffered a little bit of a, got in a little bit quicker than maybe I should have done. But anyway, my stop's out of trouble, and I think this is going to close that gap in the coming weeks on EasyJet. But just back to financials for a moment. This is CBG Close Brothers. They got entangled in the car loan issue, but on that recent announcement, they shot up to 557, and now from this drop zone, and now we're pulling back again. In situations like this, I always find that it goes back to the breakout area. So I'm looking for CBG Close Brothers at the £4 mark, because I think there's a lot of traders who have missed out on that. I tend to find that does eventually find its way back, and then if that gets bought, we should see 550, 650, and much longer term, maybe back into this year, into next, potentially 790, £8 on Close Brothers. So I've just been very patient, very cautious, and waiting for a pullback on that one. I'll leave it there. This is becoming quite a long video, so I do hope that helps. Now I have moved office, I'm getting better organised, so watch out for changes in the coming days and weeks. Alright, any feedback, let me know. If you want to come in our Telegraph room and you're not in it, drop me a line.